was only slightly embarrassing. Who knows how long we'll stay connected this time, but for all those that were watching the YouTube page, I apologize. This is the major danger in running these shows solo, is that if I DC, the whole show collapses. So. Anyway, I guess it's live and learn. I'm just going to post a message to the TradingView, and hopefully okay, so I turn that off. So let's go over here. Okay, what do we got here? All right. I think what's probably best is I'll just sort of continue my rant here, get through all of the things I wanted to cover. So if any of you do want to watch the rest of what I was going to say, just watch the second video. A little disappointed, but what can you do, eh? So that must have been the old screen. Alright, that's our new one. Jeez, I was in such a nice rhythm there too, eh? Oh well, that's where it goes. Alright, so S&P 500, lots of risk. We talked about William Gann, 50% level. Here's the OTE sweet spot. If the OTE sweet spot itself is 50 points lower, about 30% correction. Maybe we see that into the fall. As I said, I'm probably going to be looking for, something in the neighborhood of 10%, here, which would be like 20 points, then up to new highs, then a little monkeying around, and then a drop off into the fall. So we'll see how that goes. Lots of bear momentum divergence. Willie is nice and stupid. I suppose you could argue the last buy signal that we got was right in here. Nice double bottom action. Willie, nice. Actually, there's a nice kiss and go. Momentum pretty strong. Certainly not toppy. After a long correction. So obviously a bit of risk right now. Now, I run a model that for investors, and basically all we do is follow the 13 EMA and the 30 SMA. And that cross is right here for the bullish sign, and basically that's been in bull the entire way. We might get this kind of price action, and if we do, that might cross the moving averages, but for the time being, moving averages are positive, so really there's no reason for investors to do anything right now. All right, so we looked at the stock market, we looked at the bond market, we looked at the US dollar. There's a reference of the setups and stuff. So we can just close that. Hopefully, there you go. All right. So I'll finish this show off just today with a review of some of the recent ideas, specifically with regard to options. I run this portfolio called the WDB, which just happens to stand for my father's initials. But its, I guess, purpose in life is to identify option trades where you can get paid to hold the positions on margin. We had a number of very good ones, over the past. DRYS was an excellent one. PWRD was an excellent one. You can just go through them. Some of these stock prices are quite remarkable. Let's see what. Look at this Amcor, just gone crazy. I mean, there's stock after stock after stock. This was an $8 strike. Right now it's $7. So basically, anything you collected is gravy. So your cost on the stock is $8 minus $3.65. So what's that, like $4.40 to $4.35? And here it is at $7. So that speaks for itself. There have been clunkers. Like here's ANR, Alpha Natural Resources. Pretty compelling valuations, only trading a quarter of book value. Basically, it's trading at the cash value of the company. Issue is, of course, they have a whole bunch of debt. But again, I think they're in the coal business, and coal is very out of favor right now. But as a deep value investor, this is something that any investor ought to pay attention to. So I don't have a problem with that trade. It was the $18 strike, of which we collected $9.80. So your cost is what, $8.20. So sitting at $4.32, it's basically half of what your cash cost is. So certainly not stellar. I guess the way I look at this is, we had this position on, it ran up basically to break even, and then I spent the past year just cratering. The cost to actually hold this position on margin is 30% of this $8. So that's $6. So, even the margin position, you're down about $1.50. So there's a good example of a clunker. Basically you just sit there and basically do nothing right at the moment. DRYS was one that took off. Just did fabulously well. It hit $5. Our signal was back here. IAG's a gold stock. Very interesting, compelling valuations, trading at half of book value, of which they've got 87 cents in cash. So, not stunning valuations, but interesting. So according to the WDB right now, you're long from about, $6.20, $7.20. So sitting at 340, so you're underwater a bit there. Your margin requirement to hold the stock is $5, so you're underwater by $1.50 there. PWRD was one that did very, very well. Zoomed all the way up top here. Getting pretty expensive now. But the cash cost on this one was basically about $11. What's that? I guess $10.20. So even now we're sitting on a double. SSRI has been coming up on the screen of late, but it was a monster here just lately. Where are we? SSRI? Yeah. So just in particular, these were the $20 puts. We collected $9.80, so $10.20 cost. And this was the $15 put. So again, your cost $9 and change on those two trades, and we got up to 12. So basically, you're sitting at break even right now on a cash basis. It's still trading below book, and they got a lot of cash on the books. So, this is kind of an interesting situation in that basically you're in the position, you're basically sitting scratch. You had to take some heat on it, trading at pretty good fundamental valuations. We actually have another gold stock here that's come up on the model. So, I really don't have a problem just sitting on this stock. I mean, basically, your margin requirement to hold this position, for example, was $7, so you're up, $2.50 there. Margin requirement to carry this is 5, so you're up $4 there. Let's see what Thompson looks like. I haven't looked at him in a bit. Whoa, a very interesting technical bottom here. Hey, look at that, fascinating. So something to pay attention here on Thompson Creek. This is molybdenum. Again, trading at very silly fundamental values, trading half of the book value of the company, of which they have $1.37 in cash. So it's only trading 2 times cash. And the model, let's see what the model did for us here. So all of these still look very interesting. $7 strike, of which we collected 310, so your cost is 390. So on the stock, sitting at 284, we're down $1. On the cash cost, the margin requirement, is that right? $7 strike. Yeah. Margin requirement to carry $7 stock would be 30%, so that's $2.10. So you're still got a pretty good cushion there. So it looks to me like all of these metals names, they're not terrible. Slightly underwater, just bobbing around, break even kind of idea. And the coal name, same sort of thing, underwater, but fundamentally they don't look too bad, and the charts don't look like bad places to be. And then of course some of the winners have just gone crazy. So that's actually very typical of the fundamental sort of model. Is that basically you're buying out of favor companies. And you got to sit on them for a bit. So that brings us to sort of recent candidates. And the screen, very interested in AEG. This is this European financial stock. And I would imagine if their balance sheets keep getting better, which I think they are, the financials will look better. RBS, that's another European financial stock, again, trading at very, very low valuations. And I think this is Region Financial, yeah. So, another bank. They keep putting up these kind of numbers, and the street's got to bring the stock up. I mean, trading at 13 times earnings, looks like they're expected to earn some money going forward. Less than book value and quite a bit of cash, and not really that much debt, only a third. It's not too bad. A couple of the ones that have come on the screen lately that have just been going crazy. This is this AU Optronics. Basically, lots in, well, I guess that's pretty old. That's not really that big of a deal. I guess that they're in play with regard to the Google Glass, so you could argue that that's probably a play off of that. Having said that, not bad valuations, trading a third of book, 2/3 of book value, with a lot of cash on the books. So and actually priced to free cash flow. That's not bad at all. They are carrying a bit of debt, so that's a bit of concern. But nonetheless, you can see what the street does when they bid these stocks up. They can go up quite dramatically. And Nantime, this is a very interesting fundamental story. Basically, tech stock trading at very respectable valuations, no debt, basically going to pay you a dividend to hold their stock. You can see the double bottom here, 650 sure looks like an interesting area there. Is this an island bottom? You know, technicians, that's an interesting price pattern. Probably shows up on the weekly chart. Let's see what the weekly chart has to say. Yep, there's the island down there. So that's very interesting there. You can see how high this stock has been, so it's definitely got room to go. So technically not a bad idea. Maybe a little overextended in the short term. And the only other one on the list is this AKG, which, you know, right now the option premium WDB, they're going to give you 200%, which is a huge cushion. Basically, if you buy this stock, you get exercised on the option at $5. Your cost is $1.90, right? I mean, to carry this stock on margin, $5 stock, they're going to want 30%, right? So 30% of $5 is $1.50. So, you know, you have just a monstrous premium over what the carrying cost of this stock is on margin. So that alone is interesting. Then we pull up the chart. So let's look at the fundamentals. Price to book, 0.74. Price to cash, $1.96. So in essence, they got a cash of a little over $1 there. So in essence, half of this asset's price is just cash. So regardless of any of the other assets they own, properties, gold, you know, any aside from any of that, gold would probably be considered a cash asset. But any of the variables that go into making up the book value of the company, the market's basically giving those, you know, basically discounting less than what fair prices are. What I found with these precious metal plays is people will often, when we're in bear markets for the precious metals, they'll often just basically discount the mine assets or any of that. And then, of course, when we're in bull markets, they'll associate a huge premium to them. So I think that's kind of what's going on right now. But, you know, I think you should be able to take solace in the fact that they've got $1 in cash on the books. You know, you look at the chart, and what I see is, you know, going back to the old highs, and, you know, this is a bit ago now. I mean, I'm not saying it's going there tomorrow, but look at this. There's a nice island up here. There's lots of unresolved business up here. So you know, I wouldn't be surprised if we get a massive gold run. This thing heads up into that area. But what I see here in the short term is a bullish momentum divergence. So that's in there. Willie did get stupid. Whenever Willie gets stupid, it's always an idea. Just if you're thinking of selling, don't sell. But if you are thinking of buying, see if Willie works into the equation. You know, like you had a nice little momentum divergence there, so that set up a potential trade here. And of course, Willie just kissed oversold. Same sort of thing here. We actually have a nice OBV transition here, nice double bottom, and of course, Willie's oversold. So long and short of it here on a weekly basis, this is a very interesting idea. You know, if we just draw our very simple fibs, you know, looks something like that. 38.2. That's my always love to talk about that as my first stop target. So I think $4 is perfectly realistic. 460, and the street will start considering shorting in earnest here. Who knows when, if and when that'll happen, but you know, if we do get a rally into that area, this is where they're going to start shorting. Looking at it just on the short term, don't really think she's actually turned the corner here just yet, but you can sort of see what's going on here. And And, you know, it doesn't surprise me that the WDB spits up signals like this right now, because, you know, this is a pretty weak market. Fundamentally trading at relatively respectable numbers. And now technically, we have bullish divergence confirmed. Well, I don't know if it's confirmed or not, but it is set up there. If we break down below here on momentum, that might just be a continuation of that pattern. We have, you know, this is a what they call a descending wedge, regardless of the divergence, right? It looks like this. You know, this might have to go on through the summer. You know, we might get a swish down into here, but usually this actually resolves bullishly. So we'll see how that goes. I could argue that OTE sweet spot tag looks very interesting here. That's $1.82. And you notice that there's a gap right here at this closed here on this bar, $1.75. So could definitely see action in there. You know, if you're a believer in the institutional order blocks, then, you know, this is where the market went down. They broke market structure here. So you could argue that really this whole area from this high down to this low here, this is all bearish market structure where the bulls will try and defend. And then if we look at the actual option price, this is a $5 put for August. So and you're going to get paid $3.10. So $5 put, you're heavily in the money, obviously. You get paid $3.10, so your cash cost on the stock, is that right? Should be $1.90. Sorry. So your cash cost on the stock, by writing that option at $3.10, is right here. $5 put at $3.10. Whoops. So we'll put a vertical line there. So that came right here. And then let's see. I don't even know if this show's running right now. Well, looks like it is. It's marching right along. Who knows if I'm even talking to anybody? I really don't know. All right. So cash cost for writing a $5 put is $3.10. At $3.10 is $1.90. And you see that bare ABCDs and OTEs are right into that area gap there. So, you know, maybe have your order at $3.20. You know, offer, see if you can get somebody to panic and maybe pay $3.20. That brings your cost down to $1.80. Anywhere in that area, in my opinion, looks interesting. The margin requirement to carry this stock is $1.50. So that's right here. So you've got a nice cushion basically to new lows. So, you know, my hunch is that we're probably going to head down into this neighborhood here, you know, completing this wedge. But nonetheless, basically, if you write this $5 put and you're exercised and you hold the position on margin, brokerage house will say, I want to see $1.50 at all times, and there it is. So that's fine. Again, we're not using the actual vehicle itself for margin purposes. We get the margin from a third source. All right, so that's sort of our entry strategy. Now, where can this thing realistically go? I really like this $4.61. So, at $4.61, then on your cash cost of $1.90, so this is greater than a double, right? And so we have just a nice general rule that if the position doubles in value, then out goes half, right? As soon as you get into a risk-free trade, then you want to $1.90. So what's that? That's $3.80. There's double in there. So at this level, sell half double. All right, so it looks something like that. That's how the trade's set up here. So let's just put a little note in here. August, $5 put written at 3:10. Let's see. Boom. All right. And this is the what is this? AKG WDB options. Let's say WDB trade. 04/21/14. All right. So that's basically how the WDB goes about its business, right? Like right now, nobody's really interested in this stuff. And so it doesn't surprise me that the WDB spits up these type of results. So when the market's all hot and frothy, that's of course when people will be interested. And by that time, we actually should be selling. And just to get an idea where that option sits, here it is, the August $5 put on the Yahoo. Bid 280, offered 330. So working in order there at 310, that's not totally unrealistic. Okay, so that's that guy. And I saved that, so we can put that away, that away. All right, previous WDB trades, thought I'd just take a quick review. Recent trade idea here is on cotton. Here again, here's this 38.2 of the retracement from the high to the low. I like the idea of a December 2014 call, so buy yourself lots and lots of time. Here's the double bottom. Remember we talked about setups. There's the double bottom pattern. So basically the cotton chart, boom, 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 boom. She's backed off a little bit from this breakout level, completely understandable. You could probably argue that we might even have to come all the way back down to this trend line. There to there. Any sort of move back into this area is completely acceptable. Will the option price come down? Probably. I find it interesting here that this, we did this 2 or 3 weeks ago. In fact, we should probably just put the horizontal line, vertical line, right there. All right. The price has actually come down. If you look at cotton, cotton prices have actually come down. This is a weekly chart. Prices have actually come down a bit. Chung, 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 chung. And yet, the irony of it all, this option, we talked about it a few weeks ago, at $1.05, and you could have comfortably got a fill there. This option went up to like $1.15, $1.20, and even now, this 95 call is sitting at $1.07. So, and actually, look at that, it was down 6 ticks on the day. So it was at $1.13. So even though prices come down a little bit here lately, from our breakout buy at $1.05, we're actually still technically up on the trade. So, my feeling here is that this is just simply, probably like a fall harvest play or something like that. It's a December contract, so that means that this trade basically ends somewhere in here. This is our window. What I'd ideally like to see is a run to this 127. That would make these options worth $15,000 from $500. I think that's pretty respectable. Could we run up and tag the 200 SMA? That's perfectly realistic. That's at 100 right now. A nice big fat round number, which to me means a $95 put will have to be worth $5. So, if we see better than $2 on this option, obviously I'll be talking about selling half on a double, yada, yada, yada. But I think there's a lot of money to be made on cotton call options. Anyway, we'll see what happens. All right, so we talked a little bit about cotton. I was super excited about Brazil, and I thought, I guess we'll just finish off today's show with a review of the Brazil trade. Get rid of that. Get rid of that. Get rid of that. Leave that open. We can close that. All right. Maybe what we'll do is we'll just load the Brazilian real. Where are you, real? You're around here somewhere. Usually I'm all so ahead of time. There we are. Ready ahead of time. Okay. So, as this GAFSIA, it actually came up on the WDB screen a while ago. This is like almost a year ago, June 2013. So we've already been in this trade quite a while. Having said that, I find it really interesting with the Brazilian real. We've put in a nice tight double bottom right at the old lows, so that in itself is quite compelling. Technically speaking, you can make an argument that we should have just seen at least a 50% retracement of that move there. So what a coincidence, here we are in the OTE short sweet spot right now. So that often happens. You see me highlight these OTEs all the time. So not a big surprise we're running into a bit of traffic here. I suppose you could argue, sell in May and walk away, looking for the S&Ps to come down 10%. I could very easily see this Brazilian real come down to into this area down here. All right. So, I think the easy, no-brainer part of this trade, buying this double bottom here, that's gone now, right? Now the question is, are these BRIC countries really turning the corner in earnest? We had the fast moving average turn here, so that's worked its way higher. Now we're starting to get the slow moving average turn here. They always talk about the 50-day moving average and the 200-day moving average. That's like a death cross when they cross bearishly. I might argue that this is a bullish cross. I don't know, what do you call it? A birth cross? Maybe the birth of a new trend. But this is a 30 SMA and the 200 SMA. So I would imagine the 50 is probably looking similar to that. We can just take a quick look at that now. All right, so 50 hasn't quite turned here yet. We might get a bit of a battle in there. You can see how it, basically turned here last time. Then when it turned down, it was just nasty. So here we are. We haven't quite got there yet. Might need a little push higher just to get that to happen. But anyway, we'll see how that goes. I guess on balance here, the way I'm looking at it is, we had a nice free, easy trade there north, and now that trade's getting a little bit old. I think the best proxy for sort of this broader movement was that Brazilian ETF. Let's see if I have that here. Do I have it? I think it's EWZ. Is that it? For Brazil. All right. So, on that bottom in the Brazilian real, you can see there's nice bottom in their equity markets. Recaptured a key level. Nice room to run. Just one heck of a rally. I suppose you could argue we should have expected a rally into the OTE sweet spot. You probably heard me talk about that ad nauseum now. And that's right up into here. All right. So not a big surprise that we're having a fight here. If institutions were going to short this breakdown here, if they really were bearish and were like, you know what, I need to get short, this is where they're going to short. And sure enough, that's where you can see where the traffic's come in. So really now it's just a question of, all right, is this really actually a bull market? And if so, demand will just simply overwhelm supply and prices will go higher. And same thing on the Brazilian real, right? Is this actually like a demand-driven market? Prices will be pushed higher. If it isn't, and it was just purely a technical bounce, and this is still a range market, then this will fail here. And if this is a range market, then we should be looking for a move back down to the bottom of the range. And the OTE would be here. So those are the levels I'm going to be watching for in the short term here over the next while. I fully expect a seasonal trough here. So that sort of brings us to our big proxy. Was there anything that sort of captured this big move here? And so this is this silly PBR. And PBR or Petrobras, basically it's a huge component of the stock market there. It's a state-run industry. So long and short of it is, as this thing does well, so does the Brazilian stock market. So there is that rally that we just sort of looked at in the other markets, right? Just a big booming rally. Fascinating that 1494 was a 61.8% tag. So we got as high as 1487. Holy moly, that's close, eh? That's this last range here. Here down to here. So still looking for 15.5 or so, somewhere in that neighborhood. You can see she had a nice day today here. Crude oil prices, in my opinion, still look like they're pointing higher, so don't really see any major change there. You can see the money is still flowing into this name, not out. Willie did kiss overbought there, and you can see we rallied right up to this. This is actually a long-standing trend line on the MACD going way, way back. So we came right up to there. Let's see if we can see it on the weeklies. So that was there to there, so we just came up to that trend line there. The options themselves, very interesting. PBR. Like sometimes when you write these options, it's actually in your best interest just to take profits and buy the option back if it gets cheap enough. So, on this option trade in particular, let's zoom back in here. Zoom, zoom, zoom. It was the $18 strike at 720, which gave you a cash cost of $9.80 on the stock. So that's right down in here. $10.80, sorry, $10.80. So that's right off of these lows. So 720, let's go see what that option's trading at right now. And that was the May $18 strike. So this thing's coming up pretty soon. May $18 strike right now, $3.90 to $4.35. So you could basically book 50% capital gain just going and buying the stock back, or buying the option back, right? So that's always a consideration in itself. But the irony of it all is that we want to be shareholders. So, I'm just going to ride it out and see how it goes. Obviously what would be absolutely beautiful is if they rallied it above $18 before the end of May and the options expiry. Obviously, I don't think that that's going to happen. But, if we start getting $15, $16, $17 and the option's only like $1 or $2, it might just be in the best interest just to take the premium and buy the option back. So we'll see how it goes. Regardless, good trade. WDB basically got you in on the bottom, which I guess is a bit fortunate, but nonetheless, good fundamental idea. And this is a good example of how writing options, you actually can make both capital gains and you can get yourself some really cheap stock. The irony of it all here is that, like I said, if we buy the option back before expiry, then we'll never actually be shareholders. And then that brings us, and I sort of touched on it a moment ago, brings us to Gavicia. Still love the fundamental valuations. Beautiful bottom here. Stock now 338. So, this option was from a year ago. So, like we said, this was from way back here. So, basically we've just been shareholders the whole way along. Very good looking price action. Joe went and bought a September call option, which, I'm not a big fan of because I don't think there was enough time. But anyway, he bought the call at a nickel, and right now it's 12. No bids. Again, this is just basically a proxy on, does this stock zip up to $5 before expiry? If it does, then he hits a home run. If it doesn't, then he's out his $50, buying 10 contracts. So not a bad idea. All right, so it's 6:51. It really sucks how my internet just dropped out there. So, oh my goodness. So I wonder how long I've been doing this with the screen share dead. Wow. Today's not been. Oh. Yeah, now this thing doesn't even show it. There it is. So I guess you'll have to consider today's show a radio show with a few visual demonstrations. I can't believe that. So I don't know how long I've been doing the show here today without visual cues, but obviously this didn't go as well as I anticipated. Probably a good testament to the fact that I should have a co-host. If you don't have a co-host, somebody who can at least let you know if you're doing something wrong or whatever, they can come to your rescue. All right, well, this has been an interesting adventure. Probably not the way I would have liked it to have gone, but hey, that's the way life goes. So, obviously there aren't going to be any questions because nobody's in the lounge here. But anyway, I thought I'd just do it anyway. So this has been CRInvestor, Brian Beamish, Canadian Rational Investor. This has been the Power Options Show for Monday, 21st of April, 2014. We had to do two shows here because the show dropped out halfway through. So if you did watch the first show and or you didn't, you missed the first part, then feel free to check out the other half and have yourself a great day. Thank you very much for listening and participating. All the best. God bless. And I wish you the best in all your trades. Have a good night, everyone. Bye now.